Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bearish scenario where we're looking for a three-wave structure to the downside in a WXY, and after wave Y, we're then looking for continuation to the upside and higher prices to come. In this scenario, the target area for your wave X here is between the highs that we have over here and the 1.38, which is all the way up at 46.1k, which is in confluence with the golden box that I have over here, sitting between 45.2k and 46k. Now, naturally, the target for a wave X is actually between the 0.382 and the 1.38. But if we look more locally at what this structure could be, then I have a potential flat on my chart over here. Here we're then looking for a wave A, B, and then a wave C to the upside inside wave X. And then we're looking for a wave Y to the downside. And because of wave W being a flat in this structure, wave Y can be a flat, a zigzag, as well as a triangle. So we have to be patient and see what price is going to do after it then takes this high for then a potential 3-wave A, complex correction in B, 1, 2, 3, 4, 5 wave structure in then a wave C. You also see the 1-to-1 over here on the chart, and the 1-to-1 would be an invalidation for a diagonal because then wave 5 would be longer than wave 3, and that is not allowed in a contracting diagonal. Also, wave 4 over here currently finding support on the 0.382, which is a common target for a wave 4 in a diagonal structure, so that is absolutely fine. The only thing that is not too great is that wave B on my chart did not hit the 0.9 Fibonacci taken from the low to the high of A. On other charts it did hit the 0.9, not all of them, but at least on some of the charts the 0.9 was hit, which is a minimum requirement for a flat wave B. So this is quite interesting indeed. Now you also see that I wrote over here, a flat B in a bigger flat is a low probability, because compared to my previous videos, I now remove the wave A, B and the wave C from my chart, because if we are looking for a potential ABC over here, where this is a 5-wave structure, then this becomes a flat in a bigger flat. And inside a bigger wave B of a bigger flat pattern, you don't want to see an internal flat pattern over here inside that wave B, because that really lowers the probabilities that you're going to have a bigger flat. So if price takes this high over here, probabilities really go down for an A, B, C structure, and instead, therefore, we have to think about a WXY structure. If this was the high, and after this high we move to the downside, then we could have had a potential A, B, C with then a 3-wave structure in B, or a bigger WXY double zigzag in wave B. But at the moment it looks highly probable to take the highs here based on the micro, which I'll get to in a second. In the more bullish scenario, we are looking for this corrective structure to have ended in then a WXY with inside wave X a triangle. Now it is important that 4 out of the 5 waves inside a wave X are zigzags. Now we have a zigzag then in A, zigzag in B, very short wave C as you can see compared to A. Then we have a more complex structure in D, and then a structure here, zigzag in wave E. It's not an ideal triangle, but it is basically the only way how you can fit in a bullish scenario coming out of this low over here towards the upside, which was found by Dasai Gaming. And in this particular scenario, we could then be looking for 2 structures to the upside over here. The first one is a diagonal where we're looking for wave 1, 2, 3, 4, 5. It's the same diagonal as I've just shown for a potential ABC, but in this case, it is then a leading diagonal. The invalidation is the same as well as 45.9k for this wave 5, as it is not allowed to be longer than wave 3. And for a wave 4, your target area over here, the 382 to the golden pocket, with the low of the golden pocket sitting at 42.6k. Now it's also interesting to look at the volume, because if we think about diagonals, then preferably the volume in a diagonal would move to the downside, but instead you can see that we have a bump towards the upside. Wave 3 has a higher amount of volume in the high compared to your wave 1. And this is something that is not actually really something you like to see in a diagonal as mentioned. Could increase the probabilities of a three-wave structure over here. Now after a wave 5, or at least for a wave 5, we want to see volume moving towards the downside. And the second scenario where the volume pattern might be a better fit is a potential 1-2-1-2. However, if we are looking for a second wave 2, then the 3A2 is a less common target for a wave 2. The most common target for a wave 2 is the 0.5 to the 0.786 taken from the low to the high of this wave 1. The 3A2, less common, lowers the probabilities a bit for this particular scenario, but in both cases we are looking then for another high over here and then likely taking these highs as well, and then we just have to observe the reaction. Now, if we look at the range that we have here, you can see we are now testing the daily for the third time, 1, 2, 3 times. And if price moves to the upside and takes these highs, then we have to keep an eye on these highs as well. Now, I do realize that on many charts this high is non-existent, but on the Coinbase chart we do have this wick, so at least I selected it. It's 45k exactly, and then you have the lower high on my chart here, 44.7k, and the reason I select them is for a potential swing failure pattern where you grab the liquidity, close below, and then you're going to move towards the downside. So that is why it's interesting to keep an eye on these highs over here, besides the target box that I mentioned earlier. If we look at the CVD divergences, then we had both bearish and bullish CVD divergences. Of course, we are in bullish market structure, so it carries a bit more weight, the bullish one over here, and the bearish one might be about to get invalidated. And if you also look at this small little range over here, then you can see that the 886 has been touched once, touched twice, touched 3 times. Now after a first touch, any move towards the downside has a higher probability of being a wave C or a wave Y, which means it increases probabilities to come back towards the upside to take this high. Hitting the 886 for a second time increases the probabilities of continuation, and with the third hit, it again increases probabilities for continuation. But price did not only hit that small 886 multiple times. If we take a Fibonacci from the high to the low of this range here, drag it to the right side, then you can see also here we have hit this 886 3 times now. 1, 2, and if we count these together, 3 times, which really increases the probabilities to take these highs, which increases probabilities to take these highs as well. So if we then look at the probabilities of the different scenarios, then on the low time frame we are currently looking for a potential bearish / wave 2 scenario as being the higher probability scenario, which basically means a potential WXY, or we're then looking for a diagonal 1, 2, 3, 4, 5, and then a retracement for a wave 2 before then continuation to the upside. Of course, we observe the reaction if price moves towards the upside, right? And it does so in volume and it continues pumping and hits the 1-to-1 over here. Well, we're not looking for a bearish / wave 2 scenario, right? We're going to observe the reaction. What I always like to do is if we do get a pump before the weekend, I like to wait for a range to form. The moment a range forms is the moment that we can reassess the probabilities of different scenarios. Also, for a double 1-2, the second wave 2 here hit the 0.382, which is less common for a wave 2, and that is why the probabilities for this particular scenario are a bit lower, while for the wave 4 in a diagonal structure, the 3A2 is a common target. Now on the micro here, more locally, we are expecting the highs to be taken after all these 886 touches. The probabilities are very high for the highs to be taken. It has to be said, of course, just to be safe, if price does move towards the downside and it moves below this golden pocket and the order block that I'll show in a second, again, we take this over here from the high to the low. If it moves below the golden pocket here, price, and it moves below this little range and starts to close candles down here, we can be looking for price to move to the downside instead if price would do this, right? But at the moment, probabilities are lower for that to happen and higher for the highs to be taken. So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.